your recording so we can share with our other friends that might be grabbing lunch after being on other Zooms and learning opportunities. So one of the calls that I was on last week, the OPTL gentleman that was on it had shared about how creative ways to use refinancing to free up some cash for homeowners. And I thought, well, that's darn interesting. And guys, that is what this market's all about right now, is finding creative ways to help people through these kind of different, challenging times. And refinancing might be kind of a way to temporarily free up some stuff. Adriana and I talked about this on Friday, and I'm going to encourage her because it is by all means like not, you know, the best solution for all people. So let's get into this. What we're going to talk about today is some considerations. We'll start out with going over those to take into consideration when thinking about, is a refinance what's best for a homeowner. Ways cash might be made available. So there's a couple different ways that a refinance might make cash available for a homeowner, and then some lender options. Oh, and Adriana, these very much so. I walked, you've got some great videos right now on your Facebook page that I watched, and some points and tips that you had shared on there. Yeah. One of the things that to very much so be aware of when considering is it time to get a refi is your employment. So just like any loan, just like a traditional loan, you are going to need to have employment when you qualify for the loan and when you close on the loan. So this is not a solution for someone who has completely lost their job or lost significant amount of income, that they would no longer qualify for a loan for their home. And so it would be important that they still have employment, and that employment's going to stay in place. Adriana, as many of us have seen, employment verification is very strict these days. Yep. And Adriana, you can speak to a little bit more about that, correct?
Sure. So guys, we all know about the COVID going on right now. And one of the biggest things that it is affecting in the lending world is the rate of unemployment, and how fast it's growing. Okay, so one of our biggest things is Fannie Mae, Freddie Mac, Ginnie Mae, which in mortgage jargon terms are the powers that be in mortgage regulation, are requiring that we verify employment more than 3 times at the end of the transaction, prior to clear to close, 3 before closing, funding day, and then 1 week after funding, okay? So the reason that we're doing this is while many people haven't necessarily lost their jobs, they have significantly decreased the amount of hours that they're working, or maybe pulling from some extra PTO that they have. So because we don't know the length of this shutdown, and if this shutdown might even get more severe, it gives mortgage lenders a lot of anxiety if these clients can truly be able to make their mortgage payments, okay? So just prepare your borrowers that, hey, it's come from a place of gratitude. It's awesome that you have a job and it's awesome that you're still working. Make sure you provide your lender a contact in your HR department so that they always don't have to go through the borrower. I think that's only when it becomes really annoying, is when the borrower has to get involved.
Okay, can you, Adriana, if there was someone else to initiate a refinance and they lose employment in the process up, so they're 12 days into a refinance, what happens at that point?
We freeze it until they decide or until they land additional employment, but they cannot close unless they have some sort of income coming in.
But nothing would happen to the current one that they have on their property, correct?
Nope, not whatsoever.
Okay. And then that would be something that obviously you could, I mean, ideally, Adriana, you wouldn't want to go through the work of doing it all and then have to freeze it a few days before closing. But worst case scenario, they're not putting their current mortgage at risk by going down the refinancing if they were to become unemployed during the process.
Correct. Exactly. And most lenders should not collect anything up front from the client. They will pay for their appraisal if one is needed, but there should be no loss there, in all honesty, other than time.
Excellent. Okay. Credit score change. This was one of the videos that Adriana had shared with us, that if you've got had a decline in your credit score since your current loan origination, this would be something that could greatly affect your interest rate and loan offerings. So keep very well be aware of what that credit score is, and that might be a time in which maybe it's not the right time to utilize refinancing.
And can I interject on why I'm putting these out? Because when times get tough and people are looking at pulling equity out of their home as almost, it shouldn't be a last resort, but sometimes people do that. They typically haven't paid bills for maybe the month or the month prior, which would then decline their score. So just
the timing of it. Yeah, that's
that conversation that when they come to you to say, hey, I might need to pull some equity out of my house to catch up, I would ask as their trusted agent, okay, make sure you relay if you're late on any payments to the loan officer.
Well, and that flows nicely into, it does take between 30 and 45 days to close, although I know Adriana has closed them faster than that. But the time of it, and maybe being more proactive than reactive with that last point as well, that it's maybe something to be looking into before it becomes higher needs and we're missing payments on other things that would affect the score.
And that 30 to 45 is for us. So we've done them in 20, we've done them in 15. But I'm telling you right now, Wells Fargo is quoting 3 months to refi done. JP Morgan Chase isn't even accepting them anymore. I've even heard rumors that Fairway is going to not allow any refinances to even be started in their system right now, just because of the uncertainty in the market. And then additionally, they don't have the resources to keep up with them when purchase business is still coming in. So just
you're at a 30 to 45 day close for refinances at Clear Mortgage. And then, well, for those that are considering Keller Mortgage as another option to offer people, they also were at a 30 to 45 day. Any considerations that I might have missed, Adriana? I tried to watch all your videos, and then from our conversation or notes on Friday.
Yeah, the biggest thing is if they are pulling out cash to help and give some relief during what's going on in the economic times right now, it might not be the best situation. So please, please, please relay them. Don't give it to them as like, this is your Hail Mary of how to get savings to work. But if you are leveraging some sort of way to maybe start investing in some properties that we are going to see that are quote unquote on sale, because I think it is going to turn into a little bit of a buyer's market here shortly, then I think that's an awesome discussion to have.
Okay, awesome. Okay, so ways that you might be able to, cash might be able to be made available. So lower monthly payments. So I know some people, when they go through a refinance, are able to save $230 a month on their monthly mortgage payment. Some of that is a reflection of the fact that they're at a lower interest rate than they may have previously been at. Another way would be extending the term of the loan. So obviously the interest rate piece is a little easier to understand. If their old mortgage was at 4.75 and their new mortgage is at 3.5, then that difference make a huge difference in a payment. Adriana, again, can speak better to that than I can.
Yeah.
The term of the loan though, for example, if currently the homeowner has paid in for 6 years on their current 30-year mortgage, refinancing with another 30-year loan could reduce the monthly mortgage payment because they're taking the loan balance, they're adding in the prepaids and anything they roll into the loan with the refinance, and then they're extending that over 30 years instead of the 24 years that they had before. So they're adding another 6 years onto the loan and are spreading that payment out. So it's allowing that payment to go down. Another example would be if currently the homeowner has paid in for 2 years on a 20-year loan, and they then refinance with a 30-year loan, that would lower the monthly payment. Because again, they're taking a loan balance and instead of spreading it over 20 years, they're spreading it over 30 years, and that would lower the payments. So that's probably one of the ways traditionally people think about saving money and freeing up cash is lowering their monthly payment.
Can I jump in on one more too on that?
Yeah.
The way that we're seeing it now is getting rid of PMI. You guys have done a great job at putting your clients in houses that are appreciating very quickly, and someone that is paying monthly PMI, which can be anywhere depending on the purchase price from $125 a month all the way up to $185 a month. Because they have more equity in their home when they refinance, not only are they dropping down that interest rate, but they're also getting rid of that PMI. So on top of that, you're saving in interest savings, you're also saving another $185 in getting rid of the PMI.
Excellent. That's great. And the loan to value needs to be 78% to have PMI drop off, or just 80?
78% is when it automatically drops off. 80% is when it's no longer required.
So as long as the appraisal showed that there was an 80% loan to value, then the new loan wouldn't have PMI on it. That's a great.
And we can get creative too. There's other ways that lenders can get rid of PMI, even if they are at 85% or 90%.
Excellent. Thank you, Adriana. That's great. Okay, so relief from mortgage payments. So interest is paid in arrears. So on any loan, anytime someone buys a home, I think we all are aware that if they close, let's say that they close in April, their first mortgage is not due the first of the next month, but it skips a month and it's not due until June. The same thing happens with a refinance. So their first payment, if they close on the refinance in April, would not be until June 1st. So they would have to make a May mortgage payment. Potential for two mortgage payments, potential for two mortgage payment relief would be if a homeowner closes, for example, before the 15th of the month, when their current loan payment is considered late. They could then possibly forego the payment on the current loan, which would have been due on the 1st, and not have to make the new loan payment until the 1st, if not the next following month. I am going to be very, very specific and not say skip a mortgage payment, because I don't want anyone to get the wrong idea that you don't have to make a mortgage payment, and was trying to find a way to be creative. And I encourage you, when you're talking to your clients, to make sure that you're sharing that it's important that they don't skip mortgage payments, but it would be a way to have some relief from those is in utilizing a refinance. So does that make sense to everyone? And it would just be really, really important to make sure that you're timing that. And I would say that if you're closing at 4 o'clock on the 14th, and that's a Friday, that's probably not a good game plan, because in order not to be considered late and get a late fee and have your pay up go up, you need to have your mortgage paid off by the 15th. Another point, guys, is it's not that they're not there, that you would still be paying interest for. So let's say that somebody closed on the refinance on the 12th, you're still paying all of that interest from from the 1st to the 12th on that payment. Does that make it? It's still a part of their payoff. So it's not like they're not necessarily paying that. Am I saying that right, Adriana?
Yes, in theory it's right, but guys, in a refinance, it doesn't fund on the day that you close like a purchase business, okay? So there's something called a 3-day right of rescission on any refinance. So it's 3 days. So even more importantly, for someone that's trying to avoid that $35, $50 late fee on the 15th, they can't close on the 14th and avoid it. They need to close 3 business days, right of rescission days prior, okay? So at our company, we always have a, hey, if you're this is the last possible day that you can close on. So in this case, let's say that the 3 days prior were calendar days, they would have to close on the 11th, because that's 0, 1, 2, 3 for then it to then fund on the 15th to avoid that payment. And for me, I wouldn't even cut it that close, because wiring and funding is all human, and there can be some human error in that as well. So I wouldn't play too closely with it. Where I'd be really nervous is if someone didn't make their March payment in hopes of skipping 2, and then they were going down to the wire to close in March and make sure that their loan still funds in March, because after the 30th or after the 31st that month, it's then dinged on your credit. And if they get a late reporting on their credit and they want to close the next month, they can't, because now you have a 30-day late on the mortgage. So that's where it gets real crazy. Like, I would never have any of my clients play that line.
Okay, excellent. Very, very good points and very helpful, because the right of rescission on our refinance, which is different than a purchase, you've got days you can say, never mind, I changed my mind, I didn't want to refinance.
Correct.
Okay, excellent. Very, very helpful, Adriana. So another option is another way that cash may be freed up, a little bit of something that I hadn't considered before, was the prepaids. You need to set up a new escrow account. And so one way to do that is to roll those prepaid fees and cost to the loan. It's important, we'll talk about this too, that we're working with someone that there's no loan fees. So like Clear Mortgage does not have any loan fees to work with them. If there is someone that your client is working with, or that you as a homeowner are considering, they may be telling you that it's a no cost refinance, right? And what they really truly mean is that you're not having to show up to closing with any cash, right? Because they're going to roll into the loan, and just finance it as a part of the loan. So make sure that you're utilizing someone with no loan fees, like Clear Mortgage. And that's a question that you're bringing up. The other thing is that the prepaids do need to be set up that new escrow account. So for taxes and insurance. And so that can be rolled into the loan. And if you're rolling that into the loan, so there's no out-of-pocket cost at closing, then the homeowner should receive a check for the balance of their current escrow account within 30 business days. So that would be the amount for what they currently have been putting aside to pay for their taxes and their insurance. Some people, depending on the time of year, that may not be a really large sum of money. And for others, it will be, where that could be, you know, a $3,000 check that would come to them cash, and then the new escrow accounts rolled into the new loan. Does that make sense?
So
any thoughts or things that
never tell your clients that it's a wash though. So never tell them that it's going to be, let's say we need to roll in 2,500 into the new loan for their prepaids and for their escrow. They're not going to get $20 back, because keep in mind, guys, remember, you're missing 2 payments right there. Plus there's a cushion, okay, that escrow accounts always have to have. So they're not going to make, in some cases, 2 mortgage payments. So we have to collect that escrow for those 2 so that it's still on pace to pay the taxes and insurance when they come due. Plus there's a 2-month cushion that most escrow companies, some need 3, we only need 2, have to have in it. So it's not a dollar for dollar wash, okay? But I would not quote that 30 days. Servicers are so far behind, it's taking anywhere from 5 to 7 weeks now for them to cut those escrow checks back. So if your client's like really anxiously, like if you told them, hey, you can get this done with just a rate term refinance, you're going to skip 2 payments and you're going to get this escrow refund back in 30 days, you'll have enough to go buy an investment property with that money. It's going to take a little bit longer for them to get that escrow money back.
Yeah, it could very well, especially with everything that's going on. I know traditionally it happens, it's required, from my understanding, to happen within 30 business days, but given the current state, everything is different. So
yeah,
right.
yeah.
Not to have them counting on like, hey, and calling you every day, where's my check, where's my check, where's my check.
Yeah.
Okay, and then this was what Adriana had mentioned before, just a cash out, which I think is what a lot of people think of too when they think of refinancing to free up cash. So with a cash out, the loan value does need to be no greater than 80%. And what I mean by that is the home appraised value is $300,000. The loan value then could be no greater than $240,000, which is 80% of $300,000.
Mm-hmm.
So if the homeowner's previous loan value was $200,000, the buyer could take out up to $40,000 cash, because their new refinance loan is going to pay off the old loan of $200,000, and then the lender could give them $40,000 cash. Does that make sense? And Adriana, I think you've got a great point that this would be too. Right now, a lot of people are house rich. Some people are house rich and cash rich, but those that are house rich, to tap into some of that, finance would be a way to tap into, to pull out some of that cash and use it for investing, or and not just for covering, you know, day-to-day expenses.
So one point on this is, guys, remember that your mortgage is one of the only liabilities that your clients can write off that interest as a tax deduction currently. Unless something changes in our administration, currently you can still use that interest as a tax write-off, okay? So it is one of the most lucrative assets to pull some of that out and invest elsewhere, whether in another property. Even right now, with these market gains are going to be as our economy recovers, it might be a smart financial strategy to pull some of that equity out and invest it in other vehicles to gain money on there. And a lot of people don't realize that they think they might be in a great rate to be in the high 3%, let's say 3.875 on their current rate right now. We can cash out refinance down into a 3.375% interest rate, and pulling out that $40,000, their monthly payment won't change, which is what most people live on, is their monthly payment.
Nice. Excellent. Thank you, Adriana. I appreciate that. Okay. Any other questions on kind of refinancing and any of those things that you kind of, if you haven't experienced it in the past, or to better understand what that process looks like, or what questions you might be fielding from those that are considering it? So two great no lender fee cost resources. Clear Mortgage, obviously, the very, very, very helpful and well-spoken Adriana Bates, local family-ran mortgage company, and her contact info is here. She can also be found on Facebook. She's got a great video series that's sharing on those things as well. If you are the agent that needs to or likes to be able to give people more than one option, or your clients are asking for more options to be able to compare rates or whatever it may be, Keller Mortgage is another no lender fee option. That is something that you're going to read, that if the homeowner is working with a KW agent, they get $1,000 towards their cost. With no lender fees, it's something to consider as well. But Pierce is a resource there with Keller Mortgage where you can go online. But Adriana, you have been incredibly helpful as always. And I will be sharing this out on my page because I don't think it's just something that realtors should be or maybe consider right now or aware, because I think everybody kind of always just assumes you're clear on what refinancing is and what their options are. And I think there's a lot of people going through changes right now that from it. So that's my contact info, which I know you guys all have. But anything else I can help with today? Can we cheers for a 30-minute training, and bettering yourselves? You guys did great. Yay. Thanks for signing on.
Yay, thank you.
Yeah. Bye guys. I'll see you guys tomorrow at the team meeting. Thanks.
Okay, bye.